Welcome to TradeTheNBI.com. This is John. This report is for the 12th of September, and well, we continued off of this P3 that happened well back over here. We saw that we had this dip of the steel below cyan, which we expected a little bit of softness, and my suggestion was that we were going to come to that EBM, and because we had decent DOC red, we were going to probably support right there. We did. We came back above the 76, and then slight uptick in short-term buyers with the steel, and that followed through, and that's why we're approaching highs. Not to mention the fact that this continued idea that the expectation of the Fed easing is certainly going to cause the market to need to rise to match the return. Plus, you've got a secondary issue where you had so many people that were pessimistic on the overall market that you have a lot of people that were not in the play, and now they're behind the curve on returns for the S&P, and they got to play catch up, which that can drive this well easily into the 31, 32 range, 3,200 for the S&P in that. So don't be surprised if that becomes a thing. Of course, we have the 100% coming up here that we had at the, what is that, 2950 is where we're at. We're right there. The high right in that 3021 range. So we'll see if we were able to get up to that higher value. Potentially possible, especially with the suspension of the tariffs onto China. That's kind of relieved the market a little bit. It's just amazing that some people haven't understood the concept of the negotiation aspect of that. Without a threat, you're never going to get these people to agree to something that they don't have to. Sort of the opposite of the tactic that Britain is taking by capitulating to the EU prior to actually negotiating anything, and they wonder why nothing is getting resolved. So that's different approaches to negotiations, I guess. So from that standpoint, good luck for them at the EU at least getting anything done, because I think in the real world, most of us recognize that unless you have some kind of leverage, people aren't likely to give up something that they already have. So here you have NASDAQ. It's producing exactly the same kind of thing, and with the orange dip all the way, I mean, that is a brand new buy configuration from the way we look at things. So all in all, good stuff, and the euro still. It's going to be a battle for them. At least with this, they don't have a dip below the red line yet. We were expecting this to retrace back some, given the dip here, and so when it came across, it was just a matter of waiting for the more appropriate. It's not horrible, though, because you still have steel above cyan, so that's kind of why it's keeping the support where it is. It hasn't really fallen below there. From an oil standpoint, still looks decent and healthy from a overall supply standpoint, which means that there's plenty of oil being consumed, which means the economies are still moving somewhere, despite what you might hear. And that's caused a little bit of move back in gold, but that was mostly a fill of this positive extremes that had built up. So we weren't really too concerned about that, because it's been a pretty nice rise from gold standpoint, and probably not done. Intraday was pretty lackluster from early on. We had that. We had some decent sell signals. It just didn't produce much. I mean, they still ended up making slightly lower lows, but then turned around pretty darn quick. And once they caught back up to the 100% from here, we ended up with an additional buy off these breaks coming off of the gold right there. We dipped below the red line, and boom, it was off to the races, and just pretty much maintained it. We ended up with another little sell later in the day. It did produce a dip down about the 61%, but when you have that steel coming from all the way down below, it doesn't take much for it to turn around and generate that buy when everything is breaking right up. And you didn't even have red DOC dip below negative 7.5. I think that's pretty strong from that standpoint. And then it just broke out, and then of course the tariff thing came out, and that just massive short cover off of that. All positive extremes, so they will get retraced. And again, we have this other number here, 2994, as a previous algo level, and we had a lot of support and resistance right along that, but then it broke free of that. It's probably likely to come back down to that. And of course, then it leaves just a pretty decent range down to that 77, which is that previous area that we kind of supported off here before it broke out. So that's what I would look for from a continuation standpoint as we move towards the weekend. And that, so all in all, pretty decent action. And again, we're just having excellent movement, so there's no real complaint about volatility in that. It's very healthy, and we're on the right side of it. Wish the 50K had returned on that, but that's part of this. It's part of the update that I'm working with on the blue candles from our secondary pivot to generate buys when there's no action. So it's just part of the add-ons that I'm continuing to add into the updates. A lot of the windows now are showing the corrections because the contract's about to roll over here by the 20th for the latest ES. So we'll be preparing to move into that other contract probably by the next day or so, or even into the beginning of the week. That's something you want to think about before it gets close to the end. So, as always, I will put up anything relevant on the Skype chat. Trade well. We'll talk to you later.